how is compliance process different for utilities and for securities?
For utilities, it's very undefined. At least regulation is very undefined. What we see people doing as best practices right now is starting to implement checks into gateways into their token around what we call KYT, or blockchain forensics. So is this stolen Bitcoin, stolen Ethereum? Is this from a malicious node? Is this an address that's known to be associated with a sanctioned terrorist or some sort of money laundering enterprise? Those types of screens, we're seeing in some jurisdictions, people are starting to screen any transaction over like $60, as an example. They screen for that. Those types of screens, because it's all, most of it's on chain, it's very cost effective. But then you get into the platforms where you see the issuing of the token and the onboarding of the users. And they're the full KYC, the anti-money laundering, anti-terrorist financing. But also what people forget is they say, okay, well, I need a tool to onboard my users. And they forget why they're onboarding users is for the purpose of investment or purchasing some asset. And so a simple onboarding tool doesn't actually solve their need. It just simply solves the immediate pain point. And then they realize, oh, now we need to figure out some sort of system of accounting where we got every penny. And next thing you know, I've seen this so many times, people are in Excel searching with VLOOKUP, trying to figure out which investor did we send how much money to, and then the SEC comes and audits them, and they have to do it all again and provide it on, our system. What we've done is just make it really simple to export that as a CSV and generate reports off of this type of activity. So I think that the big point of compliance is actually really three things. It's you set your policies and procedures of what you're going to do, and then you do them every time, and then you have to prove that you did them every time. And if you can accomplish all those three things, then you'll see it. And with security tokens, I think rather than seeing thresholds of over $60 to check to see if the transaction is nefarious in any way, I think we're going to see DocuSign forms, as an example, as pop-ups in a trade. If this is an equity token for another company, then you're going to need to be able to purchase that. So right when you're making the purchase in your wallet, we're going to start seeing integrations into wallets where these you'll see a widget pop up that's, here's the shareholders agreement. Do you agree to all these terms? You accept that. And now if the company accepts you onto the cap table, you now own a piece of that equity. I think we're going to see a lot of non-equity securities at first. But it'll be interesting to see what happens over time.
What does a typical client of iComply look like?
So right now, our largest client volume is by far from exchanges and from some of the security token platforms as white label tools. By number of clients, we have more security tokens than anything. The ICOs and the STOs are our largest segment, but we work with one project, whereas if we work, they might have several thousand investors. But if you work with an exchange or an established platform, equity crowdfunding platform, security token platform, you're usually looking at millions of users. So I would say that our focus is more on the platforms now than it is on the individual projects, mostly because we see there's a real need in the market until our company came in, there was no company that offered a full compliance management solution in crypto assets. And we wanted to be able to solve that niche in the niche of providing financial risk and intelligence data on users or transactions. In the traditional market, there's Reuters, there's Bloomberg, there's Dow, there's Dun & Bradstreet. They provide these types of services into the market. In the crypto world, there's simply not that solution. So people were getting by with eKYC tools or smart contracts to try to do whitelisting of a certain pool of addresses. And I think what we're seeing now is a lot more complexity, to the point where we have traditional stock exchanges now, which I was surprised to see it happening this quickly. But traditional stock exchanges saying, no, we want to tokenize public equity, and working on proof of concepts with those types of exchanges as well. So I don't think that anybody in that sphere is going to go live in 2019, to be honest. They're massive organizations. But in the crypto exchanges, by the second quarter of next year, we're going to see a lot of security token platforms popping up in Europe, the UK, in Asia. I think we're going to see Hong Kong and Philippines and Thailand very quickly. Indonesia, Malaysia. I think Singapore will take longer than anybody really expects. We see a lot of really good stuff coming out of where you guys are.
And we can't wait to see
it. Yeah, and I think so. I think there's going to be some very interesting stuff in Q2. Right now, the interesting thing in the security token market in general is that everybody's the issuers and the investors are waiting to launch a security token until there's liquidity in the market. And the exchanges who are established in the market already are waiting for there to be enough tokens for them to offer liquidity to, so that there's enough of the market.
So it's like a chicken and egg problem.
Exactly. And I'm not 100% sure, everyone's kind of holding off right now. You can see it, but eventually, Open Finance Network went live. Harbor went live. We have a bunch of these different projects that are starting to go live with these different pieces. And yes, it's early stage, but they are setting some precedent for other people to say, see, they made it through, and have other people really start. So I think the other thing I think we're going to see for timeline in the market is we've seen a lot of SEC action recently. We saw things like Ether Delta, AirFox, Paragon. As an example, we're going to see hundreds more like that. And I think that's going to make people nervous until they realize that these tokens can be remediated, and a current ICO out there can actually be converted into a security token. Those investors can have an actual, rights of ownership attached to a security token quite simply in most cases, especially if they're Ethereum based.
In your articles, you seem pretty skeptical about the whole security token standard concept in general. Why is that?
The thing is when you look at, and I'll pick on the EIPs, the Ethereum Improvement Proposals. When you look at the standards that were issued for security tokens, they really all kind of do the same thing. There's a registry contract. It's usually owned proprietary by the issuing company. There's usually a whitelisting contract and a crowd sale and a token contract. And it's, there's some variation of that, but really they're creating a kind of a blanket whitelist. Sometimes they're doing it across the platform. Sometimes they're doing it for the offering individually, but there's not really much difference between them. And there's nothing stopping anybody from using a standard ERC20 to accomplish all of the same things. So my criticism on it has been to date that I feel like we have the Ethereum community has a very tight core team, and we don't necessarily need to be wasting governance resources on marketing, because that's really what a lot of these standards, it's just somebody's version of the same solution to the same problem, versus other EIPs that you see where we see 223s, ERC 223s, or we see ERC 721s coming out of this, or we see standards for digital identity or decentralized identity. These are different things that are really creating infrastructure in the market. I think that what we really need is a lot of projects building production-ready tech. Then, where we saw in 2017, there was lots of press releases about partnerships and standards and, the best thing since sliced bread, but not a lot of people pushed a lot of code, and they raised a lot of money. And now you look at this year, and we're getting 100 times the amount of code being pushed this year. And it's actually supporting real market transactions now. And I think that the one thing that you'll see with, back to the thing on security tokens versus ICOs, I do think that ICOs kind of were able to market themselves anywhere in any way they wanted, whether it was fraudulent or not. And security tokens, by their very nature, are going to be quieter because people are going to raise from a smaller pool of investors overall, I think. In a lot of cases, at least at the beginning.
Back to iComply, how did you start and how did the platform evolve through the years?
Well, technically, iComply was only incorporated in September of 2017. It came out of MIT. I was doing a proof of concept for trading interest rate swaps using smart contracts in 2015, 2016. And that successful POC where we did clearing of an interest rate swap was kind of the first concept of what we call pre-facto technology now. The market really didn't care about applying blockchain and smart contracts to securities until after the ICO craze took off. And the SEC came in and said, these are securities. And then all of a sudden people needed things like our pre-facto compliance protocol, which helps to process a token transaction the way a security needs to be processed. For me, it was a bit of a journey because, you know, going through that, not really seeing interest in the market. And then all of a sudden in July of last year, when the SEC took off, that was very, you know, I literally was 6 a.m. in the morning texting my co-founder, and he texted me first and goes, "Have you read the Dow report?" And I like to say we haven't slept since then. But it's been very exciting. We are, iComply specializes in multi-jurisdiction compliance automation, specifically in the world of fintech and crypto assets. So we do two things very well, is screening of transactions and screening of users. And so the whole focus of our company is to try to make those processes easy. We like to say that any fintech should be able to access a multinational banking compliance program for as little as $500 a month. And then, of course, things like KYC, accredited investor screening, corporate entity screening, things like that are all different ways to screen users. And then on transactions, things like AML risk, things like securities on the buy side or the sell side, we have packaged as a know your transaction tool. And that's really made to just to feed the market and help people access compliance on a very cost-effective, as simple as invoking an API. How do you make compliance as easy as setting up Stripe? And that's really what we wanted to accomplish.
You also provide access to a marketplace of legal providers and advisors. So how do you check and rate them?
Yeah, that's really good questions. So our program that we have, our network we call Global Gateway. It's a network of over 70 firms now around the world. For legal, we have coverage for over, I think it's 104 countries now. For accounting, we have coverage for 82 countries. Marketing is pretty much international. Some of all of the token advisory. So it does depend, you know, what you're looking for. If you're looking to do a real estate tokenization, your lawyer that you'll be looking for will probably be a little bit different. What we do to screen the people in our platform, if they're a lawyer, we actually check them against the Bar Association. We like to talk to one or two previous clients, get a sense of what it was like to work with them. We try to avoid bringing experts on that have no experience. So we do try to screen people with references. For accountants, we check them against CPA. Again, we're trying to see, you know, what other experience do they have in the space. For things like marketing and PR, custom token development, it's, you know, we screen the company. We actually use our own corporate entity screening. So we screen the company, we run KYC on the individuals in the company. We also actually go through and talk to some of their previous clients and get a sense of what the experience, what was the offering that they were getting from these different players. You will see, you know, we try not to, currently we don't have anything where, you know, you can offer products and services. It's not a marketplace per se. It's more of like a network of professionals, or it could be services as well. We have a couple apps that are going to be deploying widgets into there, like tax tools and different things like that. But for the most part, it's a lot about access to different service providers. And so in the case of legal, it really depends on the legal work that you're doing. In the case of a general security token advisor, I would look for somebody who has previous experience on projects before. I actually like some of the projects where they're not like, you know, this huge name, that huge name, that huge name I was a part of, because you know that, you know, that project's going to be, that the person's going to be taking a massive cut. I know of one project where they raised over $100 million and the token advisor took 30% of the tokens. Yeah. The token went up in value to almost 2 billion and he cashed out. And, you know, it did excellent for him, but the project just took a 30% haircut before they could even get started. We really try to focus on finding service providers who are, you know, offer good quality for, you know, good value for what you're paying. And so as an example, you know, when we did some of our own securities documentation for the US, what we did is we used one of our own partners. We only spent several $1,000s on the legal work because we already had the templates. We already knew exactly what needed to be done. So compare that to some of the ICOs in 2017, where two of the top law firms, you know, who both claimed to be the owners of the SAFT agreement, or the creators of the SAFT agreement, in both cases, they were charging, $400,000 or $600,000 retainers. It's just simply not sustainable. The other thing I would look for in an advisor is, if you're doing a security token, it's going to be a little bit different. But if you're doing an ICO, making sure that they have some good relationships with exchanges, not frankly pump and dump relationships. What a lot of people don't realize is, they think pump and dump is, they're like, okay, well, at least we'll get the capital. What they end up finding out at the end of the day is, if they keep 10% of what they raised, they're doing very well compared to what a lot of those projects are doing. So a lot of people get sucked in. I think it's important to have advisors who are very realistic. Probably don't need to raise 100 million, and there's a strong argument that raising 100 million when you don't even have a business model defined, it might not be a good way to go. So that would be one piece. The other thing I think I've seen from the advisors that we see our clients working with is the ones who have really good structures. Here's stage 1, stage 2, stage 3 of your raise process. Once that's done, here's a closing procedure. And they've got some really good documentation to support you through, which probably makes their job easier as well. It's very similar to going public, issuing a token. There's many of the same steps. The marketing is going to be one of your most expensive things. So having people that have good relationships. With security tokens, you can't buy your marketing like you could with ICOs. In a lot of cases, you have to be very careful that reporting is done in a manner that's not misrepresentative. And so, articles have to be factual, and you have to be very careful, because those statements can come back to haunt you afterwards. So making sure that people have proper marketing relationships. Some of the best teams that we've seen have some legal, they have some tokenomics, token advisory, some technical support, and they kind of give you a bit of a one-stop shop for a number of things. That's where we see a lot of clients, they're a little bit more upfront. What you get out of it is a much more successful offering, which was your goal.
So we have another gazillion questions for you, Matthew, but that's it for today.
Yeah, thank you very much for this interview. Thanks for joining us at Value Tokenized.
It was really good to see you guys again.
And hopefully see you soon.
Yeah, bye.
Bye.